Hi everyone, welcome back to LendTech TV from Axe Finance. I'm Emna, Field Marketing Specialist here, and today we're diving into a topic that's top of mind for lenders across the UK and Europe. It's how to stay ahead of evolving regulations without slowing down operations. Joining me is Chris, Axe Finance Chief Commercial Officer. Chris, welcome back.
Thanks, Emna. Always brilliant to be here, especially when we're talking about how we help banks future-proof their lending activities, especially in sort of an agile way. So really pleased to be here.
Let's start with the big picture. From the FCA's consumer duty to EBA and ECB guidelines, it feels like banks are under pressure from all sides. What challenges are they facing?
Good opening question, Emna. So yeah, right now banks are contending with a lot of mounting pressures from all different directions. So yeah, if we look at the UK and Europe, we've got the FCA, the EBA, and ECB, and they've all got their own agenda. But if we look at it collectively, they're all raising expectations throughout lending, throughout banking. So it's not just so much about like complying with the rules. It's more now as these are evolving. It's about proving you're doing the right thing by the customer. And there's obviously, both from and also from a societal perspective across your organization. So if we take a look at, say, something like the FCA in the UK, their consumer duty, basically what it's saying or asking of banks and lenders is, are you genuinely delivering good outcomes for your customers? And what that means in sort of real terms is fair value, transparent communication so people understand it, and a whole load of quality support wrapped around it. And so, like in the past, you could have got away with saying, you, you know, that you're doing it. Now you've got to all back it up with data. So it needs to be evidential around how you're meeting this burden of consumer duty. And so, if your internal sort of processes, your culture doesn't align with that, or you've got weak governance, the regulators will be all over you. And then we compare that with like the EBA steps in with its ESG guidance, and it's really about showing us you're planning for a sustainable future. So it's definitely not a tick in the box exercise around reporting. It's making sure that you've got proper internal transition planning, materiality assessments, and thorough engagements with the clients. And the real kicker here is the data, as many institutions are still today grappling with siloed, fragmented sources and real unclear methodologies. And then we step over into Frankfurt, where the ECB is based, and they're getting really impatient, especially around things like poor data governance, flimsy resilience planning, and vague accountability. It just doesn't cut it anymore. The ECB are expecting banks to get serious about digital risks, geopolitical instability, and cultural reform in generally. And, they're increasingly using stress tests and thematic reviews to hammer home their point. So we bring all that together. It's really clear that data matters, governance is super important, and the leaders of these banks must lead by example, because regulators are no longer willing to wait. They're stepping in much earlier than they have in the past. They're really grilling by asking tough questions, and they're really expecting firms to be proactive.
And I believe these challenges come with real costs, don't they?
Yeah, absolutely. These pressures on banks aren't philosophical or policy level anymore. They come with real world costs that can be quite hefty. And then the banks have got to find budgets to support this. So if we look at it from a money perspective, so implementing things like consumer duty or implementing ESG frameworks, it's not cheap. Yeah. Banks and lenders are having to spend serious amounts of budget reworking their systems, acquiring new systems, retraining their staff, and building out whole new governance models. And this can extend into the millions just to meet the deadlines that will satisfy the regulators. And it's not stopping there. There has to be ongoing monitoring. There has to be skilled person reviews and making sure that you've got the right tech, the bespoke technology tools to handle this ESG data that is still new. So that all adds up quite quickly. And if we think of it from a strategic perspective, it's distracting. Yeah. The leaderships of these banks now have to devote a lot more time to regulatory oversight, which often sort of, pushes innovation on the back burner and starts more forward-looking planning. Things like launching a new product. Yeah. If you've got regulatory pressures, are you going to be looking at innovation necessarily? So that's really slowed down um, things, and getting things signed off and tested is a real challenge. And because ESG, it's not just about compliance. It's actually being able to demonstrate how it can now, materially impact the bank's capital if supervisors don't like what they're seeing. And then finally, there's this cultural shift, yeah. So it's really shaking up the banks and the lenders. The things like workplace behavior can trigger regulatory interest. I mean, banks are really having to take notice of their culture much more seriously. So it's not just a policy documents anymore. It's how you bring that culture into force in everyday interactions, and how your business practices itself. And that unsettles teams and really requires a cultural investment as well, to really make sure that there's that reset in the cultural and organizational mindset. And then the final is the other stuff is a little bit more subtle. It's the opportunity cost. So, the time and energy spent on ticking regulatory boxes, yeah, that could have gone into something customer facing or innovation. Plus, you've got staff burnout to contend with. These are put a lot of pressure on the teams within these banks, to make sure that these policies are compliant, and this cultural shift is becoming part of the day-to-day activities of the banks. Yeah.
Mm.
So it's a lot. But what's interesting is how different firms are responding. Some are seeing this as a chance to modernize and sharpen their governance, while others are maybe a little bit sort of stuck by being just reactive.
Right. Now, if we talk customer engagement, regulations like the consumer duty are pushing for more clarity in how lenders communicate. How can banks meet that expectation?
Okay, so if we're talking about customer engagement and consumer duty, this is a big shift. So previously, we told them to was typically what they would say to the regulators, but now it has to be that you need to be able to demonstrate to the regulator that the customer has understood you. Yeah. So it's not just enough to send out a brochure or, bury things in a contract in the small print. But banks now have to make sure customers genuinely understand what's being offered, what it will cost them, and what it will mean in the long term. And so here's example of how banks are having to change their behaviors. So it has to be plain English. So you can't sort of try and confuse people with jargon. Yeah. Communications need to be really clear and concise and tailored to the audience. So that means sort of ditching, technical or legal language unless it's explained properly, and making sure the tone fits the customers that you're addressing. So there's a lot of testing before launching happening. Some firms are now trialing messages with real customers to see what lands and resonates well, and that doesn't confuse them, to make sure that people aren't misinterpreting something. And then, based upon that feedback, they rework that messaging when necessary before they take it live as usual. And then also you've got to think about layered info. So instead of dumping everything into a single communication, banks are now having to use tiered sort of formats. So headlines for key points, expandable sections for detail, and visual aids like charts and graphs or videos to explain the more complex stuff. So, a layperson can understand it. The other aspect is making sure that the way you design things deal with vulnerability. So communications have to be adapted for people with lower financial literacy, where there's language barriers or accessibility needs. And that's, extends to things like offering materials in braille, audio, or much more simplified formats. Also, it's about two-way dialogue. So it's not just about sending the info, you need to be able to listen as well. So banks are having to retrain frontline staff to spot where this confusion occurs, checking with the customer that they understand, and then following up with real tailored support. And also you need to have monitoring that works. So the regulator in the UK, the FCA, expects firms to track how customers respond. Are they making informed decisions? Are they asking the right questions? Or is the customer showing signs of misunderstanding? If not, you have to go back to the drawing board. So it's a real mind shift. So moving away from we complied to more like thinking, have we connected? Yeah. And the firms doing this well are seeing better engagement, fewer complaints, and stronger stuff, and less pressure from the regulator.
Yeah, that's definitely huge, and the shift, as you said, is it's really impactful, especially as AI becomes more involved in the lending process.
Sure, absolutely. And it's AI's role in lending is changing the game in ways that go way beyond automation. So we're not just talking about faster loan approvals anymore. AI is now shaping how banks engage with the customers, from that first interaction to the final repayment. So an example, conversational AI tools can guide someone through a loan application via WhatsApp or voice chat, or answering questions, collecting documents, or even pulling credit reports with consent. And this can all happen in real time now. And these systems learn from the interactions as well. They're getting better, they learn faster, they spot confusion, and they help the banks tailor responses and making sure that the customer is nudged in the right way to make sure they're getting the informed decisions. And that's a big win for the consumer due diligence and compliance. So, making sure that there's clarity and understanding because these are non-negotiable points with the regulator. Then, on top of that, you've got AI helping banks reach people that they might have missed before. So think about, populations with thin credit files or non-traditional financial histories. What AI is helping do is analyzing broader data sets. So things like, transaction patterns in open banking information, income trends. And AI is offering thorough assessment, which is opening up credit to more people, which is a good thing. Of course, there's some caveats around that. So you need to be aware of bias in your algorithms. You need to have transparency in your decision making, and data privacy are all really hot topics. But the direction of travel is really clear. AI isn't just about speeding things up. It's also about making lending more personal, more inclusive, and responsive.
Definitely. Another topic that keeps coming up is ESG. It seems like a growing area of concern, but also complexity. What's your take on that?
Yeah, definitely. And let's make sense of ESG without sort of trying, let's remove some of that sort of corporate lingo. So ESG has become one of those things that's everywhere in banking conversations now. And for good reason. It's not just about being eco-friendly anymore. It's tied into risk, both, from a reputational and strategic perspective. So regulators are treating climate and social issues as part of financial stability, and banks need to be able to show that they're not just sort of talking the talk. They have to walk the walk now. So the tricky bit, it's quite complicated, but because ESG isn't sort of a single rule book, it's sort of a sprawling mix of global standards and regional frameworks and evolving expectations as well. So one bank might be navigating CSRD disclosures in Europe, while another is figuring out scope 3 emissions from its lending portfolio. And that's a whole other animal. So on top of that, you've got the data as well, because data is still a mess. ESG data is scattered across disparate and siloed platform. Data coming from different suppliers and sitting in different spreadsheets. And half the banks we talk to, they're not even sure what metrics they need, let alone how to collect or interpret them. And that makes it hard to compare, hard to report, and hard to make real decisions based upon it. But on the upside, some banks are really turning this into an opportunity. They're building better data, they're investing in infrastructure and linking ESG goals to sort of executive incentives and embedding it right into the product design from day one and helping and informing those credit decisions. The ones treating it like a core part of their business rather than just a tick in the box for compliance are the ones we're seeing make real headway. And if you're looking at the impact of credit assessment, product pricing, or credit referencing partnerships, it's already happening. ESG isn't on the sidelines anymore. It's really shaping how banks and lending institutions lend and invest and are looking to grow their businesses.
Do you think you can share with us a real example of this in action?
Sure. Yeah, yeah. I mean, we've got one of our clients in Europe. They were absolutely up to their necks in regulatory reporting. They were juggling ESG disclosures alongside ECB expectations. And that's the usual story: multiple spreadsheets, fragmented systems, last minute scrambles. Yeah. Then by working with us and using our X Credit Portal compliance layer, they were really able to change things dramatically. So instead of manually stitching together data from different departments, by using ACP, they had a centralized platform that automated the reporting logic, pulled in the right metrics, and generated the outputs that were regulatory ready. And the fantastic result is they had a 40% reduction in preparation time. And that's not just a time saver, it's been a strategic game changer for that customer. It's really freed up bandwidth within the team, allowing them to focus on the analysis, not just the admin. Also, what's clever about sort of Axe Finance's approach is that it doesn't just tick boxes. It builds in that explainability around ESG scoring, provides real-time data audits. But when the regulator comes asking questions, everything's traceable and defensible. And it's a great example, I think, of how tech can turn compliance from a burden into a real competitive advantage.
That's impressive. So, whether it's compliance, ESG, or even explainable AI, what's the takeaway for UK and EU bankers listening today?
Yeah, I think that's a great question to wrap things up, and here's my take on things. So, whether you're wrestling with sort of compliance framework, navigating ESG disclosures, or exploring the potential of explainable AI, the real takeaway is that regulation and innovation shouldn't be at odds with each other. They should all be part of that same conversation. And banks that treat these pressures as a chance to monetize, not just, modernize, not just tick boxes, are the ones building resilience, trust, and real long-term value into their business. So it's not just about using smart AI, the smart tools like ACP to simplify the um, complex processes, aligning tech with purpose, and making sure your governance isn't just reactive; it's strategic now. So, as our EU client showed in that example I provided, when you've got the right tools and how that allow you to get the alignment right, the results aren't just regulatory; they're operational, commercial, and reputational game changers as well. So, for those of you and UK bankers listening in, it's my recommendation is don't just comply. Make sure you compete smarter, communicate better, and build your technology with intent.
Thank you, Chris, and thanks to everyone for tuning in today. If you would like to learn more about the regulatory challenges in UK and EU, I invite you to visit our blogs and news to check our latest article that addresses this topic. And also, if you'd like to know more about ACP and Axe Finance, don't hesitate to visit axefinance.com. See you on the next time on LendTech TV.